consultant or private client advisor who can help address specific questions on Social Security and how Social Security fits into your financial plan. So without further ado, let's get going. Today I'm joined by Rob Williams, Managing Director of Financial Planning, Retirement Income, Wealth Management, and Schwab Center for Financial Research. Also joining us today is Mike Savage, a Senior Portfolio Strategist supporting Schwab Asset Management. Mike, I'm going to go ahead and turn it over to you to dive into this timely discussion with Rob.
Fantastic. Thanks, Sean. And again, thank you everyone for joining us today. And you know, before we get started, I would like to make a quick comment. We understand and appreciate the choices that everyone has in terms of whom you work with regard to your financial matters. And we appreciate your giving us the opportunity to earn and perhaps keep your business. So thank you certainly for doing that. This is a very interesting topic to present. I've been working on Social Security messaging with Schwab for some 2 years. My colleague, Rob Williams, has been working on it at least that long. And to my eye, anyway, the rules and guidelines surrounding Social Security are as complex as the tax code. And, you know, this is a very interesting presentation to give because invariably people in the audience, many of whom have already made a decision to start receiving their Social Security benefits. Perhaps they're waiting to decide to take a spousal benefit, or maybe they're thinking about a survivor benefit, and we'll go over those in more detail here. But given that the rules and guidelines surrounding Social Security are as complex as they are, I really want to echo what Sean said earlier, which was please avail yourself of a conversation with a financial advisor, whether they work for us or another firm. You can also reach out to the folks at the Social Security Administration. Believe it or not, yes, a government agency has people that can really add value in a conversation with an individual. I have it on good authority. I know several people who have had the Social Security folks on the phone, and they've been quite pleased with how that has worked out. So even if you think you understand what you want to do with regard to your own decision as to when to take a Social Security benefit, I would encourage you to speak with someone to sort of bounce those ideas off of it, because it is very complex. Also, if you haven't already done so, I would strongly encourage you to sign up at the Social Security website, ssa.gov, and set up a My Social Security account. It will allow you to download an individual Social Security statement based on your earnings history, and we'll make some estimates as to what your benefit may be in the future. I've done it myself. I'm several years from retirement, hopefully, but it's very interesting information. So I would ask you to consider that. Before we get started, Rob, did you want to add anything to this in terms of overall comments on the Social Security program?
No, I think that covers it. And I think some of the high points here, I mean, there's 65 million people that are currently receiving benefits. We're going to talk a little bit about that. And the filing decision is very critical. I also want to acknowledge this is a live presentation. And I personally work in a lot of areas in retirement income and in investment planning, and certainly we're all aware of the market climate right now and inflation and all the other concerns. I'm definitely going to work to touch on some of those throughout, although this is about Social Security. Social Security is really a form of insurance. It's a foundation. It's a baseline. May not be all of your retirement plan, but it's certainly very important. And we really appreciate the questions, really appreciate you guys all being here today. And we have a lot of great material to cover. So thank you for being here and for joining us for this discussion.
All right, Rob, well then, if you wouldn't mind, would you please take us through this? Can you give us a little background on the Social Security system and what it looks like, the current picture?
Yeah, sure. And there's a slide here that we'll start with. It just shows how important this is. How many people are collecting it and have receiving benefits, and this is as of 2021. We're going to talk mostly about retirement benefits today, also some survivor benefits. It's important to know in this slide, the next slide, there are three different really pillars or really types of what we would call the Social Security benefit system. There's the retirement benefits that we're going to spend most of the time on today. That's the biggest one. Spousal benefits, which is very important. There were a lot of great questions that came in about this. There's a lot of detail when it comes to filing when you have a spouse on their benefits or a spousal benefit. That's really important. I'm going to hit some of the highlights of that today. But as Mike said, this is a little bit like law. There is no such thing as a Social Security lawyer as far as I know, but I'm going to provide you with as much education and insight, and we'll also point you to some articles and content available. But always, 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 the Social Security Administration site is a great place for the definitive answer on some of these, but also the importance of talking to a financial planner. If you haven't already, we mentioned financial consultants or private client advisors, because they have the tools to look at multiple Social Security filing situations for you to test your particular situation. So I just make that as a pitch sort of before we get started. Survivor benefits are also very important as well. When you file, say you're the high income earner and have a spouse, is going to determine the survivor's benefit for the rest of their life as well. That's very tempting. We often hear that people want to file earlier. They feel they can invest the difference, and touch on that a little bit, and then suggest some next steps, which I already highlighted to a degree already. So let's get started with the retirement benefits. That's really the biggest one. Nearly 9 out of 10 individuals age 65 or older are receiving them currently. We'll talk about some of the ages. 65 is below the full retirement age, so 9 out of 10 have already started it. You may be some of those folks. And about half of workers today are covered by an employer-sponsored plan, so the other half aren't. Now, there are some exceptions, certainly. If you work in state and local government, there's many local pension programs and what's called the windfall exception provision, WEP. So some folks may not be subject to that, but certainly most Americans that have worked in qualified employment are eligible. And another little stat, 2/3 of folks in America have not saved at all for retirement. Now, I'm sure that's nobody on this call, but it just points to the importance of this program as a Social Security safety net. And I want to also emphasize as we go through this, we don't see the retirement benefit as being an investment per se. The decision, I'll get into this a bit, about filing earlier, could I invest the difference? It's a form of insurance. And we've been paying into it, all of us that are covered in any covered work, and that builds up the benefit. And it's really important to know that as we consider, as you look at your own retirement benefits.
Rob, let me ask you this question. I'm sorry, Rob, and let's get back to basics if we can quickly. A lot of people talk about this full retirement age. I'm not quite sure when I'm going to retire, but in terms of Social Security, what do they treat as the actual full retirement age?
Right. So that's a great question to start with, and you can start filing at age 62. We'll show a slide in just a moment. But the government has an established age. They call it the full retirement age. When Social Security started in 1934, it was 65. And the last time there was a major change was in 1983. That was under, little trivia, Greenspan, who was the chair of the Fed, ultimately was the head of that commission in 1983 for Reagan. And they made changes which included raising what they called the full retirement age, which was the age that the Social Security Administration, used to calculate what they call the full retirement benefit. So that was raised to gradually phase into becoming age 67, and that was phased. So this slide shows that phasing by 2 months, depending on when you were born. And there are fewer and fewer folks around who still would be at that age 66 as full retirement. It increases by 2-month increments up to folks who are age 62 today, and then it caps out at age 67, Mike. So that was the last big change. We'll get into a little bit of this. That was the last reform, I would say, of Social Security. Certainly We're expecting there'll be some more. We'll get into it. But it was gradual. They also increased at the time the tax to pay for it. And it was only applying to future retirees. So folks who had not yet retired, folks really affected today.
Well, you're right, Rob. This seems like a relatively minor change. They extended the full retirement age 1 year and then grandfathered some folks and made it gradual for others. What do you think this says about potential future changes to the program? Can you draw any conclusions about how they might change the program going forward based on some of this?
Yeah, and that's one thing we're watching closely and do is the Social Security Trust Fund puts out an annual report. The last one is for 2021, and you've probably all read about this, and it's important to watch. By 2034, the trustees of the trust fund have projected that the trust fund and the money coming in to the funds will only be sufficient absent any changes by Congress, so no action, to pay 79% of benefits today and planned in the future. And that's the latest report on that. That does not mean that the benefits go away or they'll stop. But what we'd expect, is that there's no predicting what Congress will do. But what I do know is that they'll almost certainly have to address it at some point as that date becomes closer. It's generally been gradual. Most sort of proposals right now are to either means test, which mean the higher the income or earnings you have, maybe the lower your benefit, increasing that retirement age a slight amount. It was increased in 1983 because it hadn't been increased since 1934, and it was increased to adjust to increase for longevity. And they also increased the tax. So those are all things that are on the table. Clearly going to be watching it. But it's important to know that there are no projections right now that they won't be able to pay any benefits. But certainly Congress, will need to take some action to make sure they can pay all that they've pledged, sometimes before that date that I mentioned.
Okay, thank you. All right, can we get into an individual's Social Security benefit? Could you please explain how it's calculated for a particular individual?
Yes, and this is a bit of a math conundrum / puzzle, I would say. And I guess the first thing I would say is we have an example here. The most important thing is what Mike said, which is there are two things. One, you can get your own personal statement. It's updated every year. You can sign up for it at the Social Security Organization site, and they will provide you with a projection of what your benefits are based on your earning history that they have going at any of those retirement dates. They'll also provide things like spousal benefits, disability benefits. Those forms have been upgraded recently and are actually, I think, pretty easy to understand. Mike, you were mentioning that you'd seen one recently. So that's the place to start, but let's explain a little bit of the kind of underlying math of it. So first of all, you have to work in a covered profession, and that's most professions. As I said, state and local government, some employees are not eligible, and you're paying a tax into it, which is 6.2%, and you need to work at least 10 years in a covered employed job over the period of your employment history to be eligible. And then what the Social Security Administration does is they look at your top 35 highest years of wages. So if you work more than 35 years over your career, if you had lower earnings, say, earlier on, or even later, if you work part-time, then it takes the highest 35 years. Now, they also look at years that you didn't work. So if you don't work 35 years, it's not all bad, but they do use 0 as your average earnings for those years, and they calculate the average from that. So that's just something to keep in mind if you're thinking about when to retire, what your earnings are at the end of retirement. The more, makes sense. The more you work, the more you pay in taxes into the, for your benefits, the higher your benefits likely to be. And there's a fairly complex formula shown here that shows how that's calculated to get to your full retirement benefit. And again, that's at your full retirement age. We'll talk about that in a moment. It can be higher or lower depending on the age that you file at. So that's generally the basics. Here's a couple tips, though, that I would say is do sign up for that and then check for accuracy. I'm not saying that they're not good at tracking wages, but it's interesting to see and track. And also keep in mind that only as of 2022, this year, there's a cap on how much wages are subject to the benefits. This year, it's 147,000. So if you've earned more than that, fortunate enough, any more than that is not going to increase your benefit. And so that's generally how it's calculated.
That 35-year issue took me by surprise when I first saw it. I thought they, say you worked 20 years, I thought they would take an average of the 20 years you took. But no, they take a full average over 35 years and give you a zero value for the 15 years, if you work 20, for the years you didn't work. So I got to say that was a bit of a surprise when I first started working this a couple of years ago. If we could, Rob, let's talk a bit about how people should start to think about when to start taking their Social Security benefits. What are the options, and what's the benefit of waiting?
Yeah, so we talked about full retirement age. I think this kind of shows it, and there's a few little red numbers down there that show this example of how they increase. So I really, encourage you to focus on the numbers above, the percentages. And so we're using an example here that's full retirement age at age 66. So yours is, unless you're in your 70s and have already started, it's less relevant now, or even in your 60s, it's likely that your full retirement age is going to be somewhere between 66 and 67. And you get 100% of that, what they call the PIA, which is your the full benefit amount, if you started at your full retirement age. If you start earlier, at age 62, and if you look at the stats, there are a surprising number, I don't know if surprising, there are a large number of proportion of Americans who do file earlier, age 62. There's a variety of reasons for that. It's changing as education increases. I like to say that, we like to encourage 62 is not the age that you should say, that's when I would like to start Social Security. The intended starting age is really between 66 and 67. And if you start earlier, you're going to have sort of a pay cut. So this shows an example. And every year you wait, which is why we suggest that if you can, if you're in good health, and you have the resources, the assets that you're working, and you can do so, if you're a worker filing for your own benefits, wait as long as you can. After age 70, there's no benefit. You don't get any increase after that. So there's no benefit in waiting past 70. But this is a pretty, I would say, guaranteed risk-free pay raise. And in terms of the markets today, et cetera, we hear a lot of investors, clients say, I should just file early and invest. Well, you have to get a pretty decent guaranteed return to get the pay raise that you would get if you can afford it. Now, I saw a question in advance. There were a lot of great questions, and this one I always wondered about. So a little bonus quiz item here, Mike, and I'm not going to ask you to answer it, but I'll give people a pause to think about it, is what's the maximum today at full retirement that someone had earned, the maximum earnings over those 35 years of work their whole life could get? So the answer, you can talk to your financial consultant or private client advisor if you got this right, and it's around $40,000 annually per year. So that's a pretty good chunk of money. Certainly not enough to support everyone that's used to having a higher standard of living, but that's the most you could. That's at full retirement age. If you wait all the way to age 70, it can jump up to over $50,000 today if you earned all that, and then if you file earlier, 28,000, a little over that. So that's a big difference. Now, clearly, it's much lower for most people. The average is closer to probably $20,000 to $25,000 a year on average, but I thought that was an interesting little stat to share.
Rob, let me ask you on this real quick, and you touched on it, but we do get a lot of questions about people, hey, I want to take it early and invest it, and I'll come out ahead. But I think the numbers, if by waiting, are implied to be between 7 and 8%. So,
right.
Which I think is tax-free. So by waiting, you're getting a guaranteed rate of between 7 and 8% tax-free. A lot of people can beat that when they're investing, but there are many years when they don't. So why
Right.
take the risk?
Yeah, I agree. And I'm going to go ahead and highlight a couple other reasons why. One, it's a form of insurance. So really what we're talking about, we'll show a break-even chart here. I know we had some questions on that. It's to protect you if you live longer than average. We'll show that in a minute. But yeah, it would be, certainly in good markets you could get that, but in poor markets, difficult. Right now that we're reminded of that for sure. The other that's a timely issue is that there aren't too many investments that guarantee you a cost of living adjustment, inflation increase. Now, it's been many years since Social Security provided one, but they did provide one this year because, if you're watching the news, of course, or going to the store, that inflation has definitely spiked. That's hard to get. I'll give you an example. If you have $25,000 of a payment from a Social Security, it would cost you today about $625,000 as a lump sum to go out and buy an annuity that would pay you that amount with a guaranteed increase with the cost of living. So that's that cost of living adjustment. You can't get that in the market cheaply, and it's a very powerful thing.
All right, Rob, you said you might have some break-even data to show us. Could we take a look at that?
Yeah, that's a common question we get, and this is a table. We'll share an article with you all afterwards and a link as well that shares this chart. And it's pretty common to see this sort of a break-even age. And really what it's showing is that sort of mathematical calculation of if you file earlier versus at full retirement age versus later. And age 62 is, again, the earliest age you could file, but your benefit will be lower. So in this example, I'll just walk through it. If you're retiring at age 62, this example, you'd have a reduced benefit. It's a little hard to see or tell, but it would be, in this example, about $1,820 a month. If you waited till full retirement age, in this example, we're using age 66, that benefit would jump from $1,820 to $2,642 per month. So that's a nice little return on the delay. Now, if you started at age 62, over the next 3 years, you'd receive about a little over $90,000, and then it would take you until age 76, as shown on this chart, to break even. So that's, for those that are more mathematically or investment inclined, interesting to look at. However, and if that's relevant to you, by all means, it's helpful to use. And the other break-evens apply as well. But as I said, if you can, from a planning perspective, from a best practice perspective, if you can wait as long as you can to file, again, the average person is going to live longer than this. If you're a non-smoker, as an example, and you're age 65 today, 1/3 of males in America are going to live to age 92, at least, roughly. Females, about 1/3 or so to age 94. Here's the kicker. If you're a couple, there's something called joint probability. There's a 1 in 3 chance that at least one of you is going to live to age 96. Now, that seems like, well, I want the money now. And that may be true, but one of the things in planning and finance that's really important, and you can make your own decisions. Some people can't wait. They're not in good health. Maybe a smoker, may need the money now, but at least take this into consideration because that provides those higher benefits when you really need it, which is later. When you're older, when there's more uncertainty, you may not want to manage your portfolio, and gives you those cost of living adjustments. So yeah, that's what a break-even is, Mike, and this table helps with that decision. But again, don't plan for average is a good rule of thumb. Plan for and think ahead, what may I need later? Again, Social Security is insurance, not an investment in case you live longer than average.
Along with the idea that a lot of people are going to live longer than they might expect, a lot of people are also continuing to earn income while by working, frankly, well into their 60s, in some cases their 70s. Can you give us some idea of what some of the nuances, maybe even some of the tax implications are of someone who starts to draw Social Security benefits but continues to earn a wage?
Right. So the quick answer to that is if you're working and you've already started filing for retirement benefits, your benefit will be reduced. There's a formula. It's based on your age within retirement. Now, that's not all bad. You actually will get that money back once you get to full retirement age, so it sort of builds up. So if you're working while you're taking a benefit, that's the good news. But you may want to ask, why am I working now? Maybe I should have waited to file. But that's an important consideration. You can't work. There's no benefit after age 70. Your benefit's not going to go up afterwards. You can work, but there's no. You should don't wait past age 70 to start a benefit.
Yeah, that's how I feel about it. If you're continuing to earn an income and you haven't reached age 70 yet, I think that really suggests that you might want to try and wait as long as you can. You referred to it here, and it's shown on this slide that if you haven't reached full retirement age, they'll actually reduce your benefit and then give it back to you. This is not widely understood. They reduce your benefit above a certain income level, and then will pay it back to you after you've reached full retirement age. To me, that's very messy. And again, sort of supports the idea if you're continuing to earn a wage and you haven't waited as long as you possibly can to begin receiving your Social Security benefits, you really ought to try.
Yeah, I think that makes a lot of sense. This slide does provide some more detail, as you said, Mike, on some of those details of if you are working while receiving benefits.
And what about taxes?
Yeah, taxes. I'll give you the high points, and the short version of this. We don't give tax advice. We also don't provide legal advice, but the tax implications of Social Security is it is taxed. This was not always the case. Back when Social Security was created, it was not taxable income. That was changed again back in 1983, so a portion was. And there are thresholds. So this slide shows it. And I'll hit the high points quickly. If you want more detail, I suggest talking with a tax professional or going to the Social Security site and reading about it. But if you have a very low taxable, what they call combined income, actually, it's sort of a hybrid calculation. And the numbers that we're showing here in these numbers of the thresholds are what's called combined income for Social Security purposes. And that is a sort of a sub-page of your tax filing and worksheet. And it's equal to 1/2 of Social Security benefits. So what you're receiving is only 1/2. So not all of it. All of your taxable income that you're earning. So if you have other income. And also, this is a bit of an odd sort of throw in as any tax exempt income you're receiving, which for most people, especially those on this call, is usually income you earn from tax exempt municipal bonds. It's not a reason not to own municipal bonds by any means, but just know that those are not included in the regular tax calculation, but are that. So then there's these thresholds, and once you're over these relatively low thresholds, all of your Social Security income will be taxed at this 85% amount. So it's a bit of an odd formula, but if you are sort of earning or you have that formula is more than that, there's not much you can do to change that, but that's how those benefits are taxed.
Okay, thank you, Rob. We've heard about how the individual benefit is calculated. We've heard about earning wages after you've started to receive benefits. We've heard a bit about the tax implications, but I've got to tell you, more than any other topic, people ask about the benefit for spouses, survivor benefits. So if you're willing, could you talk about the benefits for spouses and survivors? And I know the rules get a little complex here, but could you please take us through the benefits, including the situation involving ex-spouses or divorced spouses?
Yeah, this is where it gets really interesting and where beyond, like I would say one of the key strategies we talked about is when you file. If you can wait, do so. If we have time, I'd love to cover a little bit of strategies to help what we call bridge that gap. But the spousal benefit, if you're married and have a spouse, or even if you were married and divorced, are really important. So they're really a critical part of the insurance feature. Again, if you're a couple, the likelihood of, if you're in reasonably good health, one of you living longer than average is quite high. So we'll go through some of the highlights, and there's a couple of strategies you've probably heard of, maybe if you've paid attention, but they're no longer applicable for most people. So I'm going to cover those a little bit as well. So the key is for spousal benefits, you have to be married for at least one continuous year, and this is key. You cannot file currently a spousal for a spousal benefit unless you're working, the other spouse has already filed for their full benefit. So that's quite important. There were some strategies that were allowed until recently that enabled a little bit of nuance here, but to get that spousal benefit, your other spouse needs to have filed. I'm going to describe a strategy that you can use to not work around, but to kind of use this differently in a moment. But your benefit, the spousal benefit is 50% of the spouses. So those numbers I was giving earlier was an individual benefit. If you have a spouse, you're going to have a spousal benefit, and likely your whole household benefit is going to be higher. So that's good news. So if you do file earlier, these can be reduced. Again, a lot of those strategies that we talked about. If you file at age 62, the maximum, it's not shown on this slide, but the reduction would be about 32% to 35% or so. So again, you'll get the full 50% if you wait till full retirement age for you as the spouse, and it'll be lower if you file earlier. So those are some of the key issues. I want to share an example of this. So let's say that you were born, you're the spouse, and you were born January 2nd, 1954 or earlier. And so that's probably most folks on this call. I would suspect unless you've already started Social Security. And your spouse has to have already filed again. So, and you are at full retirement age. So your spouse is the working spouse who you're using the full benefit is already drawing their retirement benefit. They've already started, and you have not filed. If you worked, if you have your own work record, you're not filing for your own record. You're taking a spousal benefit. Here's an example. Kelly and John, age 1953, born in 1955. John, Kelly was the high wage earner here, and her full retirement benefit, $2,000 a month. John was a lower income earner over the lifetime and was $800. So John can file at age 66 for that $800 a month, which is the 50% is a spousal benefit, and then they can switch later to a different plan, to a different amount. So that's one strategy that you can cover here. Now there's a couple other here that get a little bit more complex, but the good news is that they're not relevant anymore. There's something that used to be called where you could file your own benefit and then sort of rescind it. And so I'm only going to cover these very quickly. Again, these can be very complex. There were a lot of questions about the spousal benefit. Anyone that's on this call that had those questions, I would really recommend doing a Social Security consultation, talking to your financial consultant, private client advisor. They have software that can help with these different scenarios and show the pros and cons of each. That'll be a lot more powerful than sort of explaining these rules quickly. And but the key point I want to make is timing the two together can be quite impactful in terms of maximizing your income. So one is called the excess spousal benefit, and I'm going to actually sort of skip through these quickly in the interest of getting to some more timely strategies. These are not, again, the rules were changed. So in 2015, there was, if you were eligible as both a worker and as a spouse, you could file as the spouse, and you would and get a higher benefit. Now today, the current law is that if you are a worker and you have a spousal benefit, and your worker benefit, so your benefit based on your own work as the spouse, is larger, Social Security is going to pay that worker benefit. Now, that changed. It's no longer relevant. It changed in 2015. There is a grandfathering provision, but it's very unique right now, only for someone who is turning age 69 in 2022. It was one of those phased-in things, and it just happens that these grandfathering provisions are phasing out. So if you're age 69 and this is still relevant, you only have one more year where it would be so, and it won't be much of a major benefit at this stage anyway, so it's of limited benefit. And that's true of this next strategy as well. Mike, I'm going to go through a couple more, and then we'll get to a few more timely issues, and then the benefits for if you're divorced. So this is the one that I think is most powerful, and the one that most people should consider. All right, so if the parts before were confusing, I'd suggest kind of paying attention to this one. In this case, you're going to have, let's say you both have worked. You both are eligible for a Social Security benefit on your own income, on your own pay. So what you can do is the lower earning spouse, and this is generally a very good idea, the person who has the lower benefit. So if you look at your statement, say, well, I'm the lower earning spouse over the lifetime, they can file their own benefit and start taking payments. They can start at full retirement age, they can start at age 62, and then the higher earning spouse continues to work and increases that earned income, increases that delayed benefit of filing later, and then they can file later when they retire or as late as age 70. And then at that point, the person who had already filed on their own, the spouse that had their lower benefit, would then convert to the 50% survivor benefit. So that's extremely powerful because the higher earner, you'll have some payments for the household for that one earlier or lower earning spouse. The higher earning spouse will continue to work, or at least delay, even if they're not working, wait as long as they can, get a much higher benefit, and then the other spouse can convert and jump to that 50% benefit. So that's a strategy, a really powerful one. I'd suggest that anyone that's married really consider if you haven't, and run through those scenarios as I described before. Here's kind of an example quickly. Barbara files at age 66 in this case, and she's filing on her own benefit, her worker's benefit. So she files herself. Bob delays in this case. In this case, he's the higher income earner. He delays to age 70. His benefit's actually going to be higher when he waits to age 70. He's going to get sort of a pay raise from the benefit to $26.40 a month. And at that point, he's going to start his benefit, and then she will switch. So that's really the most impactful strategy, I think, to consider if you're married, and considering how to combine those two benefits together. Quickly, I'm just going to end with the ex-spouse benefit. That's called the sort of divorce premium, I guess. It's not a premium, but it's a benefit. If you've been married for at least 10 years, you're not currently married, that's important, and you're age 62 or older, and your former spouse is 62 or older, you can file on your ex-spouse's benefit. And that's equal to 50% of their benefit. So it's the equivalent of the survivor's benefit. If you have a higher benefit from your own work, by all means use that. And if you file before your own full retirement age, between 66 and 67, it could be lower. So as you can see, these are complex issues, but just know if you were married, if you had a high income earning spouse, and what's interesting about that is anything you do now, and I guess maybe fortunate or unfortunate, is not going to affect that that spouse, you qualify, and they could be married many times, and they could have many spouses that could file. So if you're filed for 10 years, you can do that. Last little tip is if you remarry after age 60, you still may be eligible for that. So if that applies, make sure you learn more about it. Okay, Mike, last big topic today, I think, is sort of our survivor benefits. And we'll close out with that one and some next steps. And in this section, that's really once your spouse passes away, if they do, that spousal benefit, really the short version, is going to jump up to 100% of the survivor's benefit. So it may have been of the worker's benefit. So you will then get that worker's benefit, and you'll get that larger amount if it's larger. And that's if your spouse has died, and some other provisions that are important as well. All right, well, those are the high points. There's a lot of complexity here. You had a lot of great questions. I think in the time we have, we did want to touch on a couple of timely issues that I think are related to portfolio management, how to think about Social Security. So, Mike, I don't know if there's anything you wanted to add here before we sort of cover a few of those, or any other questions or next steps.
Thanks, Rob. I just want to firm up the understanding and how we think about survivor benefit. By all means, please seek professional help on this. But when you're thinking about a spousal benefit, you can receive up to 50% of the primary spouse earnings benefit. When you think of a survivor benefit, it can be up to 100%. And those numbers hold true whether it's a current spouse or a divorced ex-spouse. So you're entitled to a survivor benefit if you're an ex-spouse as well. But there are a whole host of, as Rob mentioned, a whole host of rules and guidelines regarding all this. So if you think you qualify, please seek guidance on some of this. Rob, you were interested, before we go into next steps on how people should deal with this, you were interested in sort of sharing some of your thoughts on both Social Security benefits and maybe some other personal finance issues in the context of the market we've experienced in the last couple of weeks. Did you want to touch on that in some of the remaining time?
Yeah, I think that would be great. And thanks for summarizing the complex series of things we just talked about. What you said about the survivor benefit, that really sums it up. And how to time it. The one strategy I mentioned, if you can remember anything, that's really the one to think about and consider. And if that is a little difficult to follow, it's hard to explain. There is an article that we'll share that I happen to be the author of, but it explains it a lot more clearly, and we'll share that with you. So please read that afterwards if you have any questions, and then go to the Social Security site, or again, work with a planner. But I wanted to talk about a couple of things that I think are important, because Social Security is not in isolation. It's part of a comprehensive retirement investment and income strategy. And that's true all of the time. But I think today about how much volatility and uncertainty we see in the markets, and the questions that we hear, understandably, and are concerned about. I work with our market strategists who are on CNBC and talking about this and every day now. And there's a couple really quick points I wanted to hit on. First of all, if you are going to delay filing in order to get a higher benefit, clearly you have to have resources available and set aside to do so. And we call those bridge strategies often. One can just be continuing to work. So you work and you don't need Social Security. But if you don't, or you're not able, or you don't want to, saving more and having more stable investments there to help bridge that gap to when you're going to file for Social Security is important. So you may have part-time work, you may have rental income, but if you don't, a couple strategies to consider are to have sort of cash, short-term bonds, things like that. The returns are not great, but you want to create sort of a stability, a floor. Investment income from your portfolio can be part of that. Clearly, if you have a pension or other things, those are. There are other things like some people will use fixed deferred annuities where you'll put that in the market, or CDs, and that money will be there to pay. You invest the rest of your portfolio for the long term as a bridge. That money is there, and then when your Social Security kicks in, you'll have the rest of your portfolio there as well. Some people call that bucketing as well. We suggest having 2 to 4 years of relatively stable investments for what you need from your portfolio. And Social Security, pension, other things can be that floor underneath it. But again, if you're going to wait, you have to have some resources available. Second is inflation. I mentioned this earlier before. That's clearly a big concern. Nobody knows. We don't know. Certainly our market commentators, you can look on Schwab.com to see Liz Ann Saunders and other strategists' commentary on this. But inflation right now is clearly much higher than it's been. The Federal Reserve has been wanting to get it higher, but certainly there's a lot of concern they may have overshot. The good news is, to a degree, that Social Security payments go up with inflation. And clearly Congress will need to make changes in the future to make sure they can continue to do that, but it's a form of insurance against inflation. So again, waiting or knowing if you're in retirement, you're not on a fixed income, Social Security is something that will rise with inflation. Now, having a portfolio along with it that can grow, that has some stability to get through markets like now, is something we talk about a lot in combination with Social Security. And, I think the last sort of point is again, insurance. Social Security is a form of insurance. It's a protection. If you think about it as an investment, how could I cash it in? How can I invest and make more? By all means, do so. But we would suggest thinking of it as a floor of insurance underneath the investments that all of you have for retirement. And the larger that floor is, obviously the more cushion you have. And the smaller it is, the more you may need to rely on other assets. So that's really, sort of important to think about all those things together. There's many other things we won't talk about today. We can talk about another webcast in the future, like Roth conversions and strategies like that can go into a comprehensive income plan. Again, the call to action is, don't think of Social Security in isolation. If you have not talked with a financial consultant, a private client advisor, or a planner, a CFP planner, someone to put all these pieces together, if you're here listening to Social Security, it's a prime time to do so. And they will help with all of these issues, including how your portfolio is positioned for whatever concerns you have about retirement. So Mike, I just wanted to add those sort of last thoughts. And there were a lot of great questions about the portfolios, markets, et cetera. And I think it's important to think about Social Security as part of that package, again, not alone.
That's very helpful, Rob, and thank you for bringing it into context of what we've all been experiencing the last couple of weeks. So would you please reiterate the next steps people might consider in trying to navigate this landscape?
Yeah, you mentioned them. I thought you had a great point earlier, and getting a Social Security, my Social Security account at socialsecurity.gov is a place to go to, one, get the statements that you mentioned, Mike, which will show it has a lot of different, like, if this, then that as well. It'll show your full retirement benefit, and it'll show the others. It'll also show some of the options for the spousal benefits and the survivor benefits using what Mike summarized earlier. They also have some very good FAQs and things like that with examples. So if you want to go and sort of go through and calculators, specific cases, do that by all means on your own, or again, the financial plan. Check it for accuracy by all means. Look at the estimated benefits and then create a plan. Again, and that plan should not be out of context with your portfolio or anything else. But those are the next steps I'd recommend, and the email address for Social Security Administration, the web address is at the bottom.
Okay, fantastic. I think we're near the end of time, and I know we're going to follow up this email with a link to the article that you wrote that summarizes many of these topics and how people might think about when to start taking their Social Security benefit. I think at this point I'm going to stop and thank everybody once again, and then hand it back to Sean to bring us home, if he could.
Thank you very much, Rob and Mike. That was a great, in-depth, detailed overview of the Social Security benefits. And thank you to our clients for all of the great questions and all the engagement on this topic. You know, there's obviously a lot going on with the markets right now. There's volatility. And so, you know, now is a great time to go back, review your financial plan, build the diversified portfolio, rebalance your portfolio regularly, and, you know, really try to ignore the noise. So I want to thank everyone for taking time to join us this evening, and want to thank all of you for being Schwab clients. With that, hope everyone has a great evening. Thank you very much.